Hello, students. Good morning, good afternoon, good evening, everyone. This side Chartered Accountant Ashwini Bhanushali, your mentor for APM. From my side, a very great happy Diwali to each and everyone. Basically today we are conducting the class, which is on Diwali. Let me see whether we are live or not. Just give me a minute more. I hope like everyone's preparations are at top notch. Yeah, so very less days for your examination. And in that less days, we have to prepare so much. Yeah. So I think, yeah, we guys are live. I'm just checking up with the chats also. So yeah, students, without any further delay, we have already completed like the good topics, which are again important from the examination perspective. So from my side, I want to say that these non-financial performance indicator turns around to be again the most important topic, which we need to cover it. Okay. So yeah, without any actual further delay, let's just start with what is non-financial performance indicators. So without going into the details of what the things that we know, we'll go ahead with the things that we don't know, or maybe we know it's important for revision perspective. Okay, so if I again break down the words, it's basically non-financial. That means which is again not financial. So let me first understand what is the meaning of financial. Okay, if I say financial means some or the other amount which can be understood in the terms of rupee or dollar. That is basically in rupee or dollar or whatever the denominations are. So financial means which can be easily reported into financial statements. Agreed? So financial statement is a set of what? P&L statement, it's a balance sheet and everything. Means which can be quantified. Okay. Financial means something which can be quantified. Okay. So if I have something which is quantifiable, I am easily able to manage it in my financial statements, or maybe the users of financial statements can easily understand the financial figures and to know their performances. It's easy because we have lot of ratios. Yeah, we have lot of ratios like GP ratio, NP ratio. Yeah, we have lot of ROI, EVA, a lot of stuff. Maybe you can even have a glance for EPS and what not. Yeah, I can easily measure it. I can easily measure it. And I can rely, like maybe this year the performance of the company is better considered to the previous year and so on. So do you think only the financial figures are useful for an investor to take up a long-term decision that yeah, whether the company is good or whether the company is not so good? Like is it gonna sustain for a longer period or maybe within a shorter period? This company is not going to earn well. So yes, students, in this chapter, basically we are going to understand about consider two financial effects. Even the non-financial performance indicators are going to work very well. So like why? Why so? Yeah, the same example I have given it in the Hindi classes also. I'll give you the same guys. If I talk to you about Ola and Uber, right? So we know that Ola and Ubers, if I see about their like prospects for the upcoming future, I can understand that the company is working well. Yeah, so I hope the company will be having a good reputation, maybe financial terms and all. But again, if I ask you, have you seen their financial statements? If yes, you would know that the financial figures shows a very much negative things, right? So like a lot of things are basically the profits are negative, the costs are so much. Like why? Maybe the Ola and Uber is running some cars, right? So maybe they would have purchased car. And if I'm having a lot of assets, definitely the depreciation would be more and so on. So initially it is having a lot of losses. But still, if we think from the perspective, we feel that no, the future is better. Why? Because of this non-financial performance indicators, which are basically not quantifiable. Basically, over here, it's basically qualifiable. Means over here, they emphasize not on the financial figures, no, but on how the quality is maintained, how they are making customers feel satisfied. Yeah, how are they encouraging the society to grow more in the terms of like the what we can say common understanding about everybody. So the non-financial performance indicators are equally important considering to financial impacts also. So today, if there is a company who is in the short run or maybe long run is earning good profits, good financial growth. But guys, this isn't enough for any company to have a successful future ahead if they ignore these non-financial performance indicators. So to know more, what are the non-financial performance indicators? Let's just start the chapter. Dear students, no further delay, let's directly jump into the non-financial performance indicators. So yeah, students, what are we going to learn it? Okay, I'll just make it more bigger so that you can easily access it. So students, over here, we have some models also. We have some non-financial performance indicators, which interprets like what's the meaning of non-financial performance indicator. It could be like interaction with financial measures, because even if it is a non-financial measure, it itself cannot grow unless until it is combined with the financial aspects. Then we have the growth of emphasis, employees, quality, and interpreting the qualitative issues. Then we have an important topic which is way important in this chapter. This is Japanese practice and techniques. So yes, guys, over here we have some Japanese techniques, practice and techniques, which are bifurcated into very good 5 parts, which is TQM, that is total quality management, JIT, just in time. Then we have target costing. We have Kaizen costing. And last is the normal system, accounting system. So students, all these topics are important, and out of that also, if I can particularly say TQM works well, JIT works well. JIT works well, TQM works well. Okay, that never means others, you can just leave it. Yeah, you have to have a word on it. Maybe if in the exam comes, we are able to at least understand and interpret them. Okay. Then we have Six Sigma. We have a concept of brand awareness and company profile. And last over here about the quality management and the cost of quality. So yes, students, if I just ask you, will only the financial performance figures will be valid? If I'm talking to about the growth of the company, so we know come today only financial figures are of no use. Prior to 1980, many companies were only concentrating on financial measures, but today many companies have recognized that only financial measure is an inherent weakness. Because what will eventually happen? Just imagine if some companies only focusing on profits. Don't you think to create profit is not so difficult? People can manipulate the data. Yes, people can try to minimize the cost, right? Minimize the cost, maximize the sales so as to earn the name in the company, right? To reduce the cost means at what stake, ma'am? So yes, students, this happens. They reduce the cost so hell, yeah, that whatever, let's say, the material A was required of a good standard quality, they just like flip it with another material, and that is maybe cheaper or the downgraded quality. See, students, to reduce the cost, it's good, but at the stake of the quality of the products, not acceptable, because maybe today in short run I earn profit, but what about the future? Yeah, maybe my customers will be feeling today, okay, Baba, this price I am okay to purchase this. But later on, when they understand the quality, when they experiences them, the customer will not be satisfied. So as to my non-financial factors will come up there, isn't it? Yeah. So let's go ahead and understand what it is. So over here we have some interaction of financial and non-financial performance measures. So they lead to excessive focus. That is a drawback. Just they want to focus on the cost reduction. Hurry, Baba, reduce the cost. Try to reduce the cost, but not at the stake of the quality. No, at the stake of the reality. Means where I can actually save the cost, go ahead, right? But if I want to have a cost reduction, cost control, at the stake of the quality, at the stake of the employee, means where employee is like, for example, when one employee is told to work for 5 hours or maybe 10 hours, if I'm forcing him to work more, so yeah, even that is something like to more produce, I'm just like deploying my employees. Even that should not happen. Okay. So over here, my short-term reductions achieved. Yeah, how can it be achieved? At an expense of long term, which is not good. Just with the base of the long term, like okay, whatever happens in future, we'll just take care. No. Short term's profit, not at the long term stake. You cannot take it. You cannot take it. because it will any which ways, like it will reduce the morale of the staff, quality and other factors, which to be very frank cannot be compromised. Okay. Then if you see the financial performance measures tends to have internal focus. But in order to compete successfully, yeah, like for example, if I'm talking about finance, people will be just interested into knowing what is inside things. They'll not be interested in coping up with the sectors which are there from outside, right? From outside means if I can say, like, what is a change happening in the few, like in the market, change in the atmosphere. The students, even that cannot be ignored. Okay, so even that is to be considered. So here it is written that the financial performance measure tends to have an internal focus. But if I don't consider the external focuses and the external factors, company will not sustain in a long term. And at the end, company has to adjust as per the current dynamic business environment. And yeah, we know the best example I always give is COVID. In the COVID, if I'm just introducing and like going ahead with the textile market, it is obviously not going to excel in the long term because it is all about the demand which the customer possesses, isn't it? So when there is a need of some homely products, like the day-to-day products, and at the time, if I'm launching some exclusive things, it will not work well. Yeah. So even that could be a measure. Okay. Cool. Then over here we have the financial performance indicators are going to ignore these drivers, which basically the non-financial performance indicators are going to accept this. So what are they? So basically, if the financial performance indicator ignores quality, obviously it's basically the NFPI, that is non-financial performance indicator, which is going to focus on the quality, how good the quality is, right? Maybe it is costlier, but it's okay. If the people are not so price sensitive, definitely they are going to like praise the quality. And maybe that can be the situation where the customer feels satisfied and he becomes loyal to the company. Yeah, as he is going to retain in the company for a longer run. Another way is, for example, I just always give the example and which is going to be the same example. If I want to purchase air conditioner, yeah, if for example I went to some beautiful shop, which is again very famous. I'll not leak out the name. Yeah. So when they, I told them, "Ki Baba, I want the AC." So he told, "Yeah, yeah, ma'am, we have the model. Cool. So they'll deliver it to me today itself. And tomorrow they'll install the things and yeah, everything is sorted. If this is a stuff, I'll be very happy. Yeah, but what if I purchased air conditioner? It came to my place after 2 days. My God, the delivery was late. Maybe because of some issue. Because the delivery was late. Instead, it came to my place. There was nobody to come up for installation for a week. Oh my God. So their after sales service was more horrible. Even that didn't work well for me. Yeah. So definitely that is going to demotivate myself. So the customer will any which ways not at all be satisfied. See, when I was not satisfied, and yeah, I asked them, the one who came over here for installation purpose, I asked him, "Hey, why did you came after 1 week? Otherwise, you would have not came." So he told me, "Ma'am, even we are very much like irritated because there's a lot of orders and we are not so much well. Like the people are not so much. Yeah, the workforce is very less. So even the customer is not satisfied. The employee is not satisfied. If all these things are not good, the company will not sustain in a longer run. But if a company considers all these factors, in long run, the things are going to be superb. Seriously, there is quality, delivery, yeah, customer satisfaction, A and E. So if I just break it down, I always consider it as ACD, ACD EQ. Yeah, over here, after sales service, customer satisfaction, delivery, employee service, and quality. Okay. I'm very bad at giving the mnemonics, obviously, but for that. Okay. Now again, what can be the interaction between the financial perspective and the non? So over here, my NFPIs, my non-financial performance indicators, are going to cover what the long run. If we are having losses, it's okay. If I maintain this, things will be better the next moment, isn't it? Yeah, I just need to know whether we are stuck to things are working well. Yeah, I think it's working well. I'll just check it for once, huh, guys. I just need to check it for once. Yeah, the things are pretty cool. I was just wondering it for myself. Okay. So basically, yeah, my non-financial performance indicators are not just going to cover for today's thought. No, they'll be taking into care something which is long-run perspective. Yeah. Then my financial performance indicators. Oh yeah, my financial performance indicators only measure the success. Success means only, let's say, the profits. Yeah, the margin, the rates, the return, the percentage, and all. But they will not ensure you success because today, if you're manipulating your profits, in the long run, you'll be out of the market. So obviously, it's not a percentage of success. And again, over here, it's understood that both the financial plus non-financial perspectives are going to be the rounder picture. Means if the company want to sustain in long run, they have to cover up the financial and the non-financial perspective both the ways. Okay, simple. Over here, the financial and the non-financial performance indicator interact with each other, even though they may measure the different aspects. Yeah, it can be. They have to coordinate with each other. For example, an organization wishes to increase the share price. They want to increase their market share. They want to increase their whole. It may reduce its price, or may apply with the available so that the people get attracted towards that company or maybe that shop so that the share in the market increases. Yeah, it can be both the ways. Means they want customer satisfaction. For that, what are they doing? They're reducing the price, isn't it? So maybe for non-financial performance indicator, they are sacrificing some financial terms. It can be vice versa too. Such action might increase market share. If I'm reducing the price, let's say for example, reducing price, so what will happen? A huge amount of customer will come to the company. Yeah, that will increase the market share in the short term before competitor react. For if I reduce, my competitor SNAK is going to just sit and see whatever the stuff I'm doing. Even he is going to reduce the price, but it's likely to reduce the profit margin also. Obviously, if I reduce the price, obviously my sales will be reduced. Eventually, my profit will also be impacted. It's okay. Or suppose an organization has a focus on cost reduction. I want to reduce the cost so fast. And I have an objective that, okay, I want 100% clear delivery to improve. But what if I say you, they want no delays in the delivery. But what if the delivery van is on time, but the production is not yet done? So see, it's not always upon the non-financial factors who are going to get degraded because of their fault. Maybe the back end also is not working well. So yeah, it can be. If there are production delays, order may need to be delivered by courier. Yeah, say to ensure that the delivery is on time, but these will increase the delivery cost. They may therefore need to have a trade-off between the financial and non-financial aspects. Easy, easy, easy. Obviously, there are certain advantages and disadvantages too. So advantages is for example, just students try to understand. If it's a non-financial performance indicator, we don't have a term like finance in that. So it's normally like the quality. And how will I get the quality of my product is good or not? Maybe the customers can say by their own, yeah, the product is very good. Maybe if the customer is coming into some hotel industry, maybe the way they are just portraying with us, maybe that we can understand it. Yeah, it is something like on my face, I can read it, right? It is possible. For example, if it is understood as a customer feedback, what I do, I normally send them, okay, please give me some ratings. At times, if the customer is in the good mood, definitely he'll give me all the five, otherwise he'll tear the page. So exactly getting the figures are not possible. For example, if I am very happy on video call for the day, video call on WhatsApp, there is a rating 5 star. I'm very happy, I'll put 5 star. But if I'm very angry, I'll put maybe the 0 or 1. So this non-financial performance indicator, as they are not concrete over there, so to measure them, it's not so easy. Comparatively not so easy as compared to the financial terms. But over here, it is easily we are getting it. So they are usually easier to get it. Yeah, because they are we can get it very quickly. It's flexibility also. Like some organization may feel something else and other organization may have else. The popularity of non-financial performance indicators was driven by more competitive advantage and the environment in which the organization found that in order to compete, it is very important to be qualitative factors, guys. Allegedly, the qualitative factors are the uppermost important thing, such as I want to concentrate on quality, customer satisfaction, and not just that. Okay, okay, Baba, I'll give you at a cheaper rate, you're gonna have it. No. What if the customer didn't like the quality? Definitely he'll not purchase. Yeah, even he'll not purchase it. Even that cannot be done. Cool. Okay. But obviously, there are certain problems and disadvantages too. Like the organizations often ignore the financial perspective entirely. See, to have a success, to have a success, it should be a balanced between what? It needs to be a balance between your financial and non-financial aspects. If you concentrate on non-financial aspect, it's good. But what if you ignore it completely? Baba, this is not going to be applicable. So this is not possible. Okay. So this is not clearly appropriate that the company is doing so because ultimately, the objective of an organization is to maximize the wealth of its shareholders. If my shareholders are not happy, then in the long run, no, in the short run only the company will go down, isn't it? Yes. Then organizations developed too many NPIs. Yeah. So at times it is conflicted, like everybody does not achieve so. Because for me, the non-financial perfect will be indicator will be different. Even if for you and NFPI will be different. So for individual it is different. So it's a conflict. And it is very often difficult to interpret and to take the decision based on the qualitative data. Yeah. And now what happened? As a result of so much of problems, there's a very intelligent economist whose name is basically Kaplan and Norton. Okay, Kaplan and Norton has came up with a beautiful idea of having a balanced scorecard. So if I ask you about balanced scorecard, I'm pretty sure that you have already heard about the word balance scorecard. So guys, what's balanced scorecard? Have you heard about this word? Yeah. So if not, we are at a better position to learn, okay? So from here, students, the important chapter start. Okay. So basically, na, students, this is a model which just came up, yeah, and it's a method by which an organization is gonna check, like the organization is going to balance between the financial and the non-financial perspectives. So balanced means it needs to have a proper balance between four aspects. So yeah, what are those four aspects? Okay, I'll just try to write it for sure. Over here, my four aspects are, yeah, first, it's the financial. As I told you, it's a combination of financial plus non-financial terms. So for financial, it's a financial term. Then we have to have a perspective. Whose perspective the company has to think? From the customer satisfaction perspective. The company has to even think from its internal business perspective, in which thing or in which process they are good for, and which is a process or thing which they cannot handle it. So it's better to outsource. Yeah, it can be both the ways. Last but not the least is learning and growth. Okay, students. So without any further delay, whatever things I have written it with black are nothing other than the non-financial factors. With red is my financial factors. So yeah, what's the meaning of first of all balance scorecard? So basically it is a method which which displays the organization's performances into these four dimensions. So if I just want to acknowledge you with the four dimensions, it is basically we have to understand the interest of what the shareholders is interested, what the customer is interested, what the employees, maybe internal people, employees, or considering the short-term and long-term goal. For example, if it is financial perspective, see if it's related to shareholder, what the shareholder wants. The company will think that okay, Baba, the shareholder wants better profits, the shareholder wants more growth, the shareholder wants to see the return on investments, they want to know the opportunities. Yeah, so we'll let them provide these things. Yeah. Then related to customer, what the customer wants. So customer wants a good price, right? At a little lesser price, a good quality. But if what if I say you how good the company is considering the customers? So from the company's perspective, I can say that the organization can perform the customers considering how much my customer is satisfied. Yeah. How loyal the customer is. Yeah. Is the customer the first time customer? So normally happens. Even if any new shop is open, yeah, for food shop or whatever it is, we all will definitely visit it for once for sure. But then once to come at twice, thrice, and multiple times, we need to be loyal. And that is only possible if I am satisfied with whatever products they sell me and whatever they charge me also. So we have to understand from the perspective that how loyal the customer is. Are they repeat buyers? Or like is the first time buyer? What is the percentage of return always he does? So all this stuff. Up next we have internal business, which relates to internal processes, which the company has to see also. So it views organizations' performances through how good and how efficient they are in doing the processes. For example, like manufacturing, productivity, cycle, and reducing defects and all. Yeah. Last over here, we have learning and growth, which is if the company is very much rigid with no new technologies. So in long run, not possible to sustain because change is the inevitable thing which is going to change for sure. So students over here they have to include like whether the company has engaged in any new product or is it same. So all those stuff answer they have to they have to answer it. They have to answer it. Okay. Okay. I hope it's clear. Yeah. Balance scorecard model was this is the maximum what I do. Not more than that. It will come. Yeah. My students know I have a lot of water drinking habit. Yeah. Only within half an hour I'll drink so much now. Then within half an hour more. So yeah, within an hour, so I normally drink the whole bottle. Cool, chalo. Okay, up next, we'll just read it for once about my balance scorecard. So, we as a result of the problems, Kaplan and Norton was the person who has just given me the idea. Just give me a minute. Yeah, they were the person who has just given me up the idea of coming up ahead with the balance scorecard. So, the balance scorecard encourages the organization to take what? So, yeah, we are supposed to take the important decisions, which is more balanced view of the performance measures by choosing what the smaller number of both the aspects, yeah, financial plus non-financial. So if it's financial means it's finance, if it's non-financial it is three parts, yeah, it's the customer, yeah, obviously. Then we have understood about the internal business process, so yeah, internal process or internal business. And last but not the least was learning, yeah, was learning and growth. I hope it's clear. Yeah, super easy. Now I know in these also there were certain weaknesses, but that is not understood. Okay, clear. Now, students, if you can, please, I just want to mark a minute because I just want to consider it as the most important topic. Okay. Yes, students, just a minute. Like it's the most important topic. Yeah, which is the most important topic like in this chapter, which eventually comes is basically this topic, which is known as building block model. So students, if I want to be very precise, either from chapter number 1, you'll get a concept of benchmarking, or from chapter this, that is non-financial performance indicators, guys, we can get the book build in the upcoming exams for sure. So eventually I have analyzed the paper. So either it is the benchmarking, either it is BBM. So benchmarking, BBM, you cannot avoid both these topics, which are very hot topics, and like it's maybe the best examiner's favorite topic. So yeah, guys, like we just cannot avoid benchmarking. Yeah, benchmarking and the most important another topic, or it's basically BBM. That is building block model. Cool, guys. You just cannot avoid these two topics. Most important. Okay. Now, without any further delay, yeah, we know what are we going to understand. It's not benchmarking because benchmarking is something which we have already covered it in chapter number 1. Yeah, which is I have taken up in the YouTube also, so it's there. Now we have this building block model. See, students, in the question things may come, they'll ask you some Okay, please tell us some dimensions. Please give us some determinants. So we are supposed to write the four most important words, which are there. So I'll just try to explain you. Before I explain, I'll just portray the picture. Maybe if you can learn this, it will be the most helpful scenario for you guys. It's gonna fetch you good marks. So it's three words, B, B, M. So here also, we are gonna bifurcate into three parts. Yeah. But the first one is standards. I'll be having some standards. Then we'll be having some rewards. Then we'll be having definitely some dimensions. So if it's dimensions also, guys, there are two bifurcations in that. It's first of all, it's determinants, okay, and some results for sure. Okay, students. So this is what the topics are. This is what the topics are. So when it is book building model, we have set up some standards on day one, thought of what kind of revenue can be given or what type of rewards can be given, and they will be actually measuring what is true and what is not. Okay. Ma'am, so is it this much only? No, no, no. They are the headings. We have sub important points also, which are basically for standard. It is like equity. Yeah. Then we have some achievable over here. Then over here, third, we have ownership. Okay. What's next for rewards? Guys, for rewards, I have motivation. I have some clear words. And last but not the least is controllability. Then about the determinants also, I have four aspects. Okay. It is important. In this chapter, we have this determinants in our chapter. But in the prior chapters, which I have taken up, so there are the concepts of this standards and rewards also, which guys we cannot avoid it. So every time now I just write it. So over here we have resource utilization. Third point is basically innovation. And fourth point is flexibility. And last over here is the results, which are two types. It's the financial and competitive. I hope it's clear. Like I'm trying to keep it over here so it is easily visible. I'm not coming in middle. Okay. So this is what, guys. What is this BBM and how important is it? Is it so important, ma'am? So I'll tell you, yeah, Baba, it is important because I can expect one good question, yeah, from this topic also. So when I'm talking to you about BBM now, it is considering some non-financial perspectives also into consideration, which this model is going to be useful. So to measure what? So if I say normally for like manufacturing units, there are a lot of things with which I can manufacture, like which I can measure, right? But very less are the processes which are applicable for exclusively like good thing for. So it's basically applicable for service industries. So it's service industries. Okay. Now I'll give you one example of like the tutor. Okay. If I'm the teacher. Okay. If I'm the teacher of let's say standard 10th or maybe 12th. Let's say 12th standard. Okay. Just think it randomly. Yeah. Even teaching field is basically not the business and profession. It's into the service industry. Yeah. Okay. So students, what if I'm telling you, yeah, I am a tutor for 11th and 12th standard. Okay. Same way if you can see, yeah, just give me a minute. I don't know that arrows now are together, so maybe, yeah, now I think it's clearly visible. Okay, students try to understand. Okay, I am a tutor and I take up the subject like commerce. Okay, I take up the subject like commerce. There is another faculty also who takes up science. So principal just called us and they told like to the science teacher that if your students receives or gets more than 90 percentage marks, like more than 90% marks, if your student gets, ma'am, you get the bonus of let's say 10 percentage. Okay. Then he went to the science tutor, like maths tutor, the principal told. Then she went to the science tutor and she told, like if any of the student gets more than 80 percentage marks, you get 10 percentage bonus. And for me, for commerce, he came like he told, okay, ma'am, if any student goes 95%, only then you get bonus. So is it something which, these are the standards, these are the sets. Do you think is it equally challenging for everybody? I think no, right? For me, if it is like 95%, is it something which is easily achievable? Actually, no, right? What if the paper came out of box? Who is going to be responsible? Is it me who have taken up the ownership? So no, not that way, isn't it? So when I talk to you about standards, we need to know whatever the type of standards are kept over here, whatever the types of standards are kept, it needs to be equity, means it needs to be equally challenging for everyone, equally challenging for everyone. Again, it should be set as a side that it is something which is achievable, and whosoever has taken up the responsibility should be accepted. Okay, so he should only have the ownership also. So all these are the standards. Then on that day only, the principal has to announce, okay, Baba ma'am, if more than 80, like for science it's more like more than 80 percentage. For maths it was like more than 90 percentage, and for me commerce it was basically something around 95 percentage. So it needs to be very clear if they're keeping. It needs to be very clear. Why? And again, it should be told well in advance. Otherwise, what about like 1 year just went and then you get a surprise? Now, surprise! You were supposed to get the bonus, but you didn't achieve so much of marks. Ati Baba, you have to tell them first. Otherwise, what I feel, I'm getting salary any which ways. So yeah, I'm not the one like that. But obviously, this is gonna be normally okay. So it needs to be as such, which needs to be told very clearly in advance, and it should even motivate. Yeah, what if I say for everybody over here, yeah, okay, you should get like more than 80 percentage or maybe more than 90 percentage. Guys, maybe some of the people will get demotivated, isn't it? So yeah, it needs to be in such a situation that it is clear and motivating for everyone. Yeah, after motivating, definitely it needs to be controllable also. What if the paper came completely out of box, which was unpathetic? Then I just cannot scold my tutors. Are you didn't work well. See, Baba, you need to account them only for the proportion that they have a control over. You cannot scold them for something which is beyond their hands. Yeah. If everything over here is been set on day one, basically by the year end, I have to find it out. I have to determine what. I need to determine the determinants and the results thereof. So if it's determines of the determinants, so they are basically how good the quality of the company is, yeah. Or maybe I can say the ability to deliver with consistency the services. Means how good the quality, how good the sequence is, like how good the tutor teaches. Let's say I'll understand if I teach and I feel like okay, 90% of the students are getting passed. So it's students and passing ratios. Then we have resource utilization. For example, if I have, let's say, I can normally take a class for like 80 students. 80 students. What if things happen like there are only 10 students in my class? Are Baba, I am not utilizing my efficiency to the fullest, isn't it? Or maybe because of lack of, because there are lot of many tutors. So only I get 10 students. So yeah, even that is something which is less use of resource utilization. Even that can have a negative impact. Beyond that, students, we know like even the Nokia phones, if they didn't get upgraded, they were out from the market no sooner, isn't it? Same way, guys, over here also. For example, if I don't involve myself in the innovation, for example, if I was taking classes offline only there, yeah, prior. But now if I don't want to switch to online, Baba, things will not work, isn't it? So we need an innovation and flexibility to cope up with the changes. If I'm good with all the stuffs, I'll definitely achieve like any one of the result. It can be financial performances means I can get some good profits, good NP ratio, GP ratio, ROI, etc. Or maybe I can achieve competitiveness also. That is, I can be either the cost leadership, yeah, I can have the cost which is the most lowest, or maybe I can charge whatever price because my product is basically very different. So it can be both. It can be cost leadership or product differentiation. I hope these things are very clear. So yeah, this is the max which can come up in your questions. Yeah. Now we can just read it. Over here, not so much of things are given because there are certain concepts which are there in the upcoming chapters. which we are okay with it. Okay, so I have just covered each and every topic, so like nothing is left out. So yeah, allegedly nothing is left out. Okay, now just give me a minute. Okay, I'll just read it for once. Okay, students, Fitzgerald and Moon's building block model. Although Fitzgerald and Moon's building block model is described in some another chapter, yeah, it is worth to understand that because it is going to conclude with all the financial plus non-financial factors. Like how basically the big building model was conceived for the use of service industry. I told you it's basically for service industries whose purpose is to measure the performances in six categories of dimension. What are the six categories of dimension? If you remember, I was having a dimensions, I was having over here determinants, and out of that determinants, I had four topics of determinant and two financial performances. Yeah, that was results, was financial performance and competitive. So yeah, competitive. So what are these four? This is one, two. What was third, fourth, fifth, and sixth determinants? Ma'am, it was, yeah, it was quality. It was, ma'am, innovation. It was, ma'am, flexibility. And it needs to be resource utilization too. Clear? Okay. So I've just written it up. So this is what they have just produced it. So I'll just try to delete it. Yeah. Okay, students. Without any further delay, let's understand what are the six things. Okay. Yeah. So I told you there are two results and four determinants. What are two results? Profitability. That is basically financial. Yeah. I told you now, financial measures. So yeah, it's a financial performance. Okay, which could be anything like net profit, gross profit, it's ROI, etc., etc. Competitiveness, like yeah, how good I am, like am I the cost leadership or maybe whatever, how good I have covered up the market stake. I know. Then we have quality of services, yeah, it needs to be good, needs to be flexible, resource to be utilization properly, and lastly, innovation is the very important key. So within each category of BBM, the organization has to decide the proper measure, like two dimensions of the results of the results. What are the results? Yeah, it can be financial, like profit, or maybe competitive. Yeah, will be influenced with other four. For example, if my quality is very normal, which is very common, like maybe, and I am good with adopting, maybe I can go ahead with the cost leadership. But what if I say you, my quality is like superb, like not comparable also. Maybe then you can switch towards product differentiation. Yeah, it depends upon those four factors. A high the quality of the services may lead to greater customer loyalty. Maybe the customer will feel so much of motivated, they'll just stay with me. If they stay with me, definitely I'll capture the market also. Easy? Yeah. The determinants with whom I compare it, my quality and all, are likely to be mainly non-financial in nature because it's not something which I can measure it in money. Can I measure quality in money? No, ma'am. Can I measure, just think and tell me, can I measure completely all the resources utilization? Ma'am, all the you cannot measure, right? Then what if I say you, can I measure completely learning and growth? Ma'am, not possible. Yeah. Can I measure the innovation? Ma'am, not completely, isn't it? Yeah. Yeah, just a minute. Learning and growth was the, yeah. So what was that third one? Yeah, fourth one. I tend to forget a lot. It was flexibility. I'm so sorry. I'm so sorry. Over here. So do you think is it is so easy? No, ma'am. It's not so easy to measure it in the terms of money. If it's not easy to measure in the terms of money, because they're going to be a focus which considers the NFPIs, non-financial performance indicators. Oh, yes. The value of the organization's employee is not considered in the financial statements. I told you, it is only Wipro, which I have heard, which shows in its financial statements, financial positions, employees is their assets. But otherwise, nobody shows employees. It's just a P&L expenditure, which is not good. Okay, for many organizations, particularly in service organization, the value of human capital is very important and however it's very important. However, the facet, the organizations may wish to measure the relating to employees include knowledge and skill. So yeah, students, when I'll say you about the service industry, Yeah. Service industry. Let's say it's our industry, okay? The industry where we are, like ACCA or CA firm, okay? Do we have a lot of infrastructure like the offices? Ma'am, we have so big plant and machinery. No, we don't have. Then who are ultimately my assets? So yeah, it's you and me whose knowledge is ultimately our asset. So yes, that is what my key performance indicator. Yeah. Along with that, how do we gain knowledge? Maybe by degree, by understanding, by education, or by doing any previous job experiences. Do we have an attitude? Yeah. If I'm asking you about hospitality business, okay? Hospitality business, let's say it's a hotel industry or it's a hospital. Yeah, if it's hotel industry, we know the workers, no, I'm so sorry to tell it as a workers, they are not the workers. The actual people who manages things, they need to be very polite. Yeah, they cannot be rude with the customers or their clients, isn't it? And if it is hospital, they have to be responsible for some or the other ways. So the attitude is the first place. What if I am engaged, let's say in my ACCA form, I do have my CA practice. Yeah, I'm practicing chartered accountant basically. I do practice my chartered accountancy. My client gives me a call. It's one time ringing, two times. If he just brings me call on, and if I don't respond him promptly, it's okay for a while. If I'm legitimately busy. But what if I started ignoring him? Maybe he'll soon ignore me and run towards another chartered. Yeah. So no, like that way we cannot do. So my attitude needs to be very lenient. Huh? Unless until it is a genuine reason we can understand it. Otherwise, in the service industry, we don't have anything else to showcase it. Yeah, it's a knowledge which we have to like, present it to the last extent. So in the service industry in particular, it is important that the employees demonstrate a positive and helpful attitude while leading the customers or the clients. Isn't it? Yeah. Poor employee morale may affect the attitude of the employee. That is, it may also lead to high turnover. For example, if I tell you that maybe my employees are not happy, I don't provide them with the safety equipment. So what will happen? Eventually, they'll start going away from my company. So huge amount of staff turnover if it happen, then it is the biggest loss for the company. Not just about the reputation, for sure. But if let's say in my company 20 employees left, don't you think it's my responsibility now to occupy more 20 employees? I have to ask them for the CVs and resumes. Then I have to give them the trainings to the best possible way. Even that has such a cost. Yeah. So high the staff turnover leads to additional cost in terms of recruitment. Yeah, in the terms of recruitment, training, etc. To replace them with those who went. Yes. So that could also be the situation. What if I say with the performance measurement in relation to quality? So we know if it's a quantity, TT, but it's a financial factors, it's a financial performance indicator. But if it goes away with the quality, we cannot measure it. So it's an NFI, non-financial performance indicator. So the quality of the products and services is more important in the competitive advantages. Many organizations compete on the quality. Yeah. Many companies have adopted TQM programs. Yeah, students. A lot of companies has adopted TQM. Means do certain expenditure just to maintain the quality. If I maintain the quality of a product, definitely the defects will be reduced. And in the long run, the things will be super. Yeah. So yeah. And therefore, monitor the quality at all the stages. Okay. So what's the quality of the products, first of all? So if I'm telling you, okay, Acha, we need to maintain the quality. So what is quality? Yeah. So quality is nothing other than the way the product is prepared. Is it having any sort of like deficiency? Or like, is it something like faulty? Is it something like which is not so well? If yes, that means I can say my quality of the product is not well. Yes. Up next, we'll just read it once. Possible measures of overall quality and customer satisfaction are highly required. There is percentage of goods produced that are identified as a being faulty before sales. Like if just before sale, if I got to know, okay, acha, these products are very faulty, maybe I can do some rework. Yeah, I can make it more better. And if it is a situation that it is not possible to make any changes, eventually it is going to go on scrap. but at least it will not reach the customer. Otherwise, the customer will make in his mind the perspective of the company that they are going to give some better products only. Yeah, so it happens. Another way, yeah, another way, if you see, guys, it's basically the percentage of the products sold that are returned. Like if I am selling it, but if it is not acceptable by the people, they are going to return if they are not happy with it. Maybe. Then cost of fixing is also very important. Yeah, like if I'm selling the mobiles, and along with that, if I've given warranty, and if some problem comes up, I have to fix the problems also. Then we have customer retention rates. One customer coming and retaining in my company, he's always purchasing from my company. Yeah, it's good. It's good because this shows how the customer is loyal with the company. And yeah, it is always going to give some beautiful meaning only to the company. Then we have a quality and services. See, if it's products, I can understand it's faulty, it's not good, it's like damaged. So yeah, the quality is not good. But what about services? So if I'm talking to you about the services, it is something like I am working in my chartered accountant practice. Yeah, my customer is giving me a call, I'm not receiving it. Maybe he's giving me a lot of messages, I'm not replying him. Or maybe if I'm replying, if I'm unable to satisfy his needs, so what will be the situation? A number of complaints will be there. That shows if the number of complaints are there towards some company, that means definitely they are not putting their 100% efforts, or even if they are putting it for sure, they're not being able to achieve the position. Yeah. So services are different. Services are different than products. In that, now, if I'm talking to you about the products, in products, I can see, I can touch, I can get it. So basically, it is a tangible asset. Yeah. But if it is a service, I cannot see in touch. So it's not a tangible, means I can say, okay, Papa, it is an intangible stuff. And to value intangible stuff is more difficult than something which is tangible. We also know that. So services are not the products, so they are not tangible. And what values about the services is also not clear. What the client wants, it's not so clear also. He may not even give such clarity, which is highly required. Yeah, possible measures can be done. For example, first, number of complaints. Number of complaints. The problem is this: the measure, they do not measure that. It is not taken into account whether the customers who are unhappy with the services, but we do not complain. Means, for example, what? Okay, I'll just give you one example. This happened with me also about the KDK software, which I was actually using it. I was having certain problems in the income tax software, yeah, in India. So by what I was doing, I was not giving them a call because I didn't want it to be unhappy, or like I don't wanted to complain. So if I didn't complain, did they actually got my reviews? No. So that's the reason I'm telling you the feedbacks and all are not 100% true. It's just on the random basis because every party equally will not be taking up the initiative to fill up the forms, like try the company also to come up sustain. Yeah, so they'll not work like that way. Along with that, number of repeat clients. If I'm good with some work, definitely my client is going to sustain also, and maybe he can double up also. If he's happy. If he's not happy, definitely from one only situation he'll move. Yeah. Ranking from customer survey. So yeah, there is a problem, which is something like, therefore the results of the survey may not be entirely true because they need to survey. They may ask, but maybe they can ask, or maybe they can inquire to someone who is biased for the company. So again, the survey is not complete. Yeah, so all this stuff. Ranking of the customer's attitude over here by management of internal auditors by going undercover and pretending to be the good clients. It could be basically. Third, we need to access and availability of the products and services. We need to see whether I'm going to the shopping mall. Okay, if I'm going to the shopping mall or the mart, I wanted some X amount of something. Okay, this is very common. But what if they said, you know, ma'am, we don't have this, ma'am, we also don't have this, ma'am, we don't have this. Are you what not you are doing? It's better I'll not come to your shop. So this is stuff. Now this is the stuff. For example, if it is service, I told, okay, oh no, only I do income tax. So for income tax, they'll come to me. For taxation, for like, accounting, they'll go to somebody else. For GST, they'll move to somebody else. For certifications, they'll move to somebody else. So yeah, it's okay, but accessible and availability is also important. So yeah, there are some key performance aspects. As customer may leave if they are not available with the goods and services. Yeah, what they want. So they'll switch to some other company. And yeah, maybe good with that. Yeah. So yes, students, with this we have completed the first portion, which was very easy. And again, from the first portion, I am betting you, please do double BM. Book building model. It is important, okay? Don't ignore that concepts. Up next, students, we have another topic which is known as brand awareness and company profile. Okay. So yeah, if I'm going ahead with the word brand awareness, which shows that everybody needs to know about the brand. If I say you about Puma, if I say you about Nike, yeah, if I'm saying you about Jaguar, guys, we all know this stuff. Why? We know about iPhone. Why? The people knows the brand. The people are very much aware. So if I say, okay, ma'am, I don't have anything out of it, ma'am, I'm not so rich. It's okay. I didn't told you to be the brand user. No, you don't need to be the customer of the brand. No, not required. But at least the first and the foremost thing is that we need to be aware of the brand awareness. Means today if I don't have money, it's pretty cool. But I have future plannings. At least I need to know. Okay, if I cannot earn it maybe today, if I cannot purchase it today, maybe after 2 years, maybe after 5 years, I'll be at a position to purchase all the stuff. For that, I need to be brand aware. Yeah, Pukka? Clear. Then what is company's profile? The company is standing in the environment, yeah, between other entities. How good the company's repo is that way. So yeah, let's just read it and wind it up. It's small topic. Significance says, yeah, we know. For an organization to maintain the brand, it is not so easy. Huh? It's not the cup of the tea that they do it. No, no, it's not that easy. So although it can be expensive, for organizations to develop and maintain the brands. See, brand maintain karna, it's not so easy, right? Because a lot of intangibles are there which are associated. And if you remember, in the intangible aids that we write over here, the brand value. Yeah. We just mentioned brand, right? Yeah. So that the impact is going to be more ahead with all those features. For example, if I told you about the brand, if I tell you iPhone, you know, yeah, you have recognized the name, and people who actually purchase iPhones are the one who will never purchase other phone, no matter what. No matter what, they'll never switch to Androids. Yeah, perception of quality and luxury works well. Then accompanying the trademarks and the patents too. Okay, so if you see this is a brand awareness. So if you see the picture, how can a person like make users to know about the brand? How can you make the users aware about the brands? So yeah, students, it's very easy because if the people want it, okay, the users should know about my brand. They can do a hell lot of advertisements. They can put a lot of posters where on the Facebook, Twitter, YouTube, and Instagram, LinkedIn, Pinterest. Once like where not in the Google, so that the people at least know about the product. Yeah. So brand awareness means the ability of customers to recognize and to recall the brand. See, brand awareness and brand loyalty are different words. You are the customer of the brand and you are loyal to me, it's a brand loyalty. But if I haven't been a customer yet, but if I know about the brand, it's brand awareness. It's important to distinguish between brand awareness and brand loyalty. Yeah, so brand awareness, if I'm talking about brand awareness and over your brand loyalty, brand awareness is the extent to which the customer recognizes. So here you have to write the word, it recognizes the brand. It reflects that a brand's ability to attract new customer. Cool. But when it is brand loyalty, basically it is the extent to which the customers buy the products. So here I have to buy the product. Plus, I'll be continuing buying. Means it's not like once I just went it, I got the blue moon day. Like I have just touched my ears. Like Baba, I'll never go to that brand. No, it's not that. There is something like which is a ongoing customers. Yeah, cool. Then what is significant to business? If the customer does not know about an organization, they will never buy it. I don't know about the name only from where I'll buy it. And hence, one of the main objective is to grow the brand awareness. And this is why the people grow brand awareness. Because if I don't know, I'll never think of buying it because I have never heard the word. But at least if you have heard the word, you will have some like some ability, some dignity. At least, Baba, I'll buy it. I'll sure buy it. Okay. For many organizations, their brands are the most valuable assets that they control, isn't it? Yeah. Okay. The brand may be the name of the company. Yeah. In case like all the products are there, for example, Mercedes Benz or whatever it is. Maybe they can relate it to some products also. Like if it's washing powder, so yeah, that's Persil, and something can go on by the Unilever. I'm okay with it, all the stuffs, because I'm not so much of person who knows about all those. Yeah, cool. Cool. So there are various benefits accrue to the organization that have brands. How? See, students, if it's a branded thing, definitely you have an assumption. Oh, ma'am, it's branded. So you will on your own have the understanding of, yeah, if it's branded now, definitely the quality will be super. So the people will be ready to pay extra money also, just for the namesake of brand. Allegedly, I'm telling you. And they'll store the thing also very nicely, huh? The brand name differentiate the products, enabling the customer to focus on its target's market and to charge a premium price. If the brand relates to one product, that brand can be leveraged to other product. For example, the cigarette brand Marlboro was used to launch another men's clothing object. Because see, if one brand's name is famous, I can use it for other. It should also be mine only, or maybe like I should get some X money. But yeah, like people, people are mad just because of the brand and the logo. Like, seriously, the brand may lead to the brand loyalty also, so that the people repeat the customers and in the future they'll be having success. Is it so easy? Are there any issues? Yeah, there are. In maintaining the brand, they have to do a lot of what? Um, Huge amount of cost of investing in advertisement and publicity. It's very important. Like, other people, are the young generation going to see the newspaper? Hell, not never. But definitely they'll figure it out on Instagram and Twitter and Telegram. Like, so it's important to select a proper method of advertisement in which location. For example, if I say, Teacher, I'll like set up, for example, in Telangana or somewhere. Yeah, somewhere. I'll okay, everybody, I'll just give them the news on the Telegram and Instagram and Twitter and all. But what if the people they normally sees the newspaper, normalizes the newspaper? So please, people should know in which geographical location what is more accepted, and that way we need to go ahead. Okay. For example, companies that produce a market country clothing often sponsor events in horse jumping. Yeah, people do. For example, in our place where I do stay, we have Navratri competitions, yeah, because I'm basically from Gujarat, where people have a lot of dandiyas and garbas. So if I want to put up some jewelry shop or jewelry, my name brand, so I can put up at the stage, yeah. So that way, where people can have an eye on that. Okay. Then another issue is the management accountant will have to prepare the budgets for each type of promotion, obviously. And if the brand suggests a quality, the government, the organization will have to quantify, has to see whether my quality assurance. So it needs to do the quality check also, because they are charging allegedly a huge premium amount just in the namesake of quality. It's not just the namesake; it's basically because of the quality. But I don't know why people charge. Why so much? Why so much? Yeah. So the management accountant may be involved in providing the financial information both about the quality, which is my non-financial performance indicator also. Easy, super. So yeah, I think there is no doubt in the brand. Yeah, brand awareness was pretty easy. Up next, guys, we have company profile. Yeah, what's company profile? I need to know how good my organization is in its own reputation compared to other in the worlds. So yeah, a company profile is how an organization appears to the outside world. As with the brand, a positive company's profile will lead to increased sales. For example, like this is my brand, and for example, there's a brand ambassador. Maybe the company's name will be more ahead. Yeah, okay, which will increase the sales also. If the company is having very bad image, ma'am, Vijay Malia is involved in it, Baba, definitely you will lead to fall in sales. So it depends. A bad company profile could be the result of what? Maybe bad quality of services, maybe poor social behavior, poor quality of products. It can be anyways. Okay, students. So we have completed a very important like the startup topics. Now we'll be at a position to understand the most important topics which is basically the Japanese business practices. And over here, we'll be having a couple of practices. So yeah, we'll just take a break of 5 minutes and resume back. I hope you guys are understanding it. So yes, students, welcome all of you all back. So yes, students, so this again becomes the most important topic, which is Japanese business practices and management accounting techniques. So here we'll be having some small topics which we are supposed to cover. And again, this is important from the perspective of examination too. So yeah, without any further delay, let's just understand the first and the most important topic over here. It's TQM. So if I just brief you out about the TQM, what is total quality management? If you understand the concept of non-financial perspective, quality is the utmost thing which needs to be governed very well, right? So do you think the quality is something which can come up like directly, quality, we have maintained quality. Maybe because of maintaining the quality, we need to do certain expenditure, yeah, to maintain the quality or to develop the quality also. So over here, if you read the definition, it is something, it says that it is a continuous improvement. So before I go towards the Japanese business techniques, I'll brief you out with one concept. Yeah, just give me a minute. Yeah, just a minute more. Because I want to write some things for us so that it will try to make our concepts more easier. Yeah, and that is a concept which is known as the lean system. So what's the meaning of lean system? And over here, whatever the Japanese techniques have come into, yeah, they had a perspective of having some lean system. So over here, lean system means you have to improve your process, your whatever, like continuous improvement in processes like the quality, the waste, etc. So as to minimize the waste. So if I'm talking to about the waste can be like the waste means what remember. So it's something like we just want to implement some methods. It's a methods due to which if I implement those kind of methods, the waste will be reduced to a greater extent. Such that the waste could be because in the production process you have some waste. Yeah, maybe any step if you feel that you are doing it in extra that is not required to be done. Even that is a waste of time, waste of resources. So basically, we have some types of waste like it can be overproduction. Yeah, the waste can be like overproduction. If I'm required, let's say, to produce 1000 units, it's better to produce only that much, right? The things which I have a demand. But what if I produce extra? I thought like, okay, I'll keep it in extra. Baba, if I'm producing extra unit, I have to keep that unit somewhere at a safer place. So definitely my storage cost will be more. Yeah. Beyond that, we know even that, if I'm producing most things, my things get like devalued very soon because there is some obsolescence. Or if I say, if you don't have so much of demand, then why are you unnecessarily stocking the stocks? Because of which stock, I need to insure my stock also. So again, the insurance cost. So why to do an overproduction? So it's better to reduce some overproduction. Beyond that, we have, let's say, more inventory than what it is actually required. So even more inventory is not very good. Then we have a waiting over here, waiting of products. For example, for next process. For example, like I am into process 1, 2, 3. Okay, initial process, we have just raw material, then it goes into WIP and then to finished products. Let's say the WIP people are very slow. The process takes a huge amount of time. So there is a stock up of all those things. Yeah, even that can be a more delay. Or it can be a more transportation cost. Like for example, transportation means, let's say this is for factory. And in the factory, let's say there are a lot of number of employees. And the canteen they have, it's like 1 kilometer away. Oh my God. Daily so much of transportation they have to do. It's a waste. Better the waste is known as defects, and at times it's over processing. To overcome this small defects, students, oh yeah, we have came up with the lean system has came up with the important topics that we are going to cover it, and that is known as, these are not the radical changes. It is not BPR. It's definitely not business process re-engineering. It's not that you have to start it from the start and every process you're supposed to change it. No, small improvement will definitely, that it's just the water drops of water and the ocean has been filled. That way, small improvement. In the long term, you will get the differences for sure. We have the concepts of like TQM, that is total quality management, just in time, We have Kaizen costing, guys. We have over here the Six Sigma. We have another topics like which can be like the target costing and some normal accounting system. With the first one, we are going to cover is TQM, that is total quality management. Guys, this is a total quality management. We have to manage our quality in the best possible way. In the best possible way. So if you just see the TQM, the total quality management, it's total quality management where everything needs to be managed. So do you think the total quality management is it so easy to manage, or ma'am there is something else which we have to rely upon it? So yeah. So we know when it comes up to the total quality management, we have a definition. Yeah, so we have a definition which says like it's a continuous improvement, not just one time improvement. It's a continuous improvement which each and every person has to develop so as to attain as to maintain the quality. Yeah. So as to maintain the quality. Just give me a minute. Yeah. Yeah, actually there's some let's just just a minute. So yeah, basically, yeah, it's basically everyone's efforts, that is the managers, the workers, everyone who is going to coordinately take the efforts and to improve the performance at every level. So as to achieve, so as to attain the TQM, that is total quality management, every process, every product, every service, no, where it is required only that much we are going to improve it. So over here, it is understood like TQM says that it's a philosophy that says get it right the first time, every time. What's the meaning of this? Just give me a minute. What's the meaning of students? This get it right the first time, every time. Do the process which is correct and please do it in a repeated mode so that small improvement can reach to the utmost thing. Okay, that means my aim is to achieve what? My aim is to achieve zero defects. And students, you know that if you are producing, let's say, 40 units in one shot, you cannot achieve zero defects. It's a small improvement. Every time try to improve yourself, get it done right for the first time, and every time slowly and gradually try to improve it. Yeah, so it recognizes what the that the cost of the bad quality may exceed the cost of good quality. So we have not to cost, guys. Yeah, this is my cost. And to understand the concept of QM, we need to know the cost. So there is a good quality cost also, and there is a bad quality cost also. So I'll just try to help you out with this. And students, it is easy. So that topic is known as COQ, that is cost of quality. So what's the meaning of, guys, cost of quality? So yeah, guys, we have two types of cost, as I told you, good quality and bad quality. So we cannot say it as good and bad as such. So it's known as cost of good quality, or we say it as a cost of conference, cost of good or conformance cost, and cost of bad or non-conformance, okay, or non-conformance cost. So what's these? What are these two types of costs? So basically, this good quality cost and the bad quality cost is also subdivided into two parts. This also is divided into two parts. It is known as prevention cost. It's known as appraisal cost. Yeah. Over here, it's known as internal failure. Over here, it's known as external failure. Students, within 2 minutes, you're going to understand what are the stuff. And it's the most easiest topic. So students, if I just say about the cost of quality, let's say if I want to maintain the quality in anything which I produce. What is the normal quality? What are the costs which normally a quality people require to maintain the quality? So maybe you'll say, okay, ma'am, we will like see whether the work is perfect or not. Maybe I can inspect it. Maybe ma'am, I can sell like if my products are good, definitely I will not get return things, right? Maybe servicing cost is less if the quality is good and so on. But students, if the quality is bad, yeah, if the quality turns around to be bad, and then if you incur the cost to make it good, that is, once the quality is deteriorated, and then if you do it good, it's known as the cost of bad quality. But before the quality turns around to be bad, if you are implementing some cost so that the quality should not be bad, it's known as cost of good confidence. Means, what if I say you, this thing happened and then I am like doing things to correct it? That's bad quality cost. Things should not happen. For that, if initially I'm taking up the cost, that is known as cost of good confidence. So over here, my cost of good confidence is something which is very important. If people are expending a lot towards good quality cost, definitely the bad quality cost will not be so much. So what's was the good quality cost? It means it's a prevention cost. For example, if I'm saying you that, oh my God, in this current year, my defective units out of 100 units are like, out of total 100 units, let's say my 10 units are defective. So my God, it's due 10 units defective. I'm very much defective. So without, what should I do? Like 0 units to be defective. I can apply this prevention cost. How? Before the things get production starts, before the production starts, for example, what I can do is I can analyze, I can go to the supplier, I can visit the quality of the raw material, I can analyze the stuff and I can say, okay, this material is better, this material is better. That means it is incurred before the production starts. Something which is preventive. If I apply this cost, definitely my defects would be reduced. So that is known as prevention cost. Once you have chose the materials, it is started, like for example, the input and all things are started. It is getting incurred in the production stage. It is getting incurred like all the stages. It is going like input to output. Every now and then, if I want to check my quality, for example, I'll do inspection, I'll do the equipment checking, like are the equipments not very bad, which produces the faulty units, and so on. So I'll figure out that too. So students over here, my appraisal cost means what? Okay. So if I say my appraisal costs are nothing other than the costs which are incurred, which are ongoing, Okay. So just try to read it over here. These are the two costs. Okay, guys, these are the two costs. That is prevention cost and appraisal cost, which are to be done before the units get faulty. But over here, once you are not applying this cost, definitely your units are faulty and you get the internal failure. Means I feel, oh shit, so much of the units are scrapped, so much of the units need rework, but it is yet not sold to the customer. It's internally we got to know. But what if I didn't knew and I sold to the customer? Oh my God. And he told me, ma'am, your products are faulty. You need to repair me. You need to give me warranty, etc., etc. Oh my God, that is known as the external failures. Okay, so for achieving every cost of quality, we have to incur all those steps. That is cost of quality. It needs to be either the good confidence cost or the bad confidence cost. Okay, now with that overview, we can just start it. Okay, students, now you will feel it so confident. Okay, we can just read it. Okay, now, so key concepts are what? There is a dissatisfaction with the status which says that if a target of 0 defects is not feasible, the management and staff should believe it is possible. So it's wrong. We can achieve it, but not in once. Slowly and gradually. Slowly and gradually, only it's possible to achieve. It's not like in one shot you're going to achieve it. No, no, no. Every process has a process owner and every person contributes to improvement. Like every person has to contribute. A small improvement is enough. So over here, the goods and the services from total quality management system will be competitive on what basis? So cost, flexible, delivered within the minimum time. Okay. Successful implementation and running of a TQM system required what? Ari Baba, we need to know, we need to have a training, we need to be educated to all those required for production of goods or services and etc. workforces. Training helps us to reduce what? If I'm good at training, maybe if I'm good with the training, the trainer has provided me, okay, this is the way you have to make the unit. So if I'm good with the training, definitely I'll not mess up doing the wrong products, maybe manufacturing the wrong products. So a lot of scrap is saved. Training produces the benefit of reduce wasted, improve the quality of the products, plus the market will be situated, will be improved, my sales will be more, oh my god, my profits will be more. Eventually it will eliminate the waste and somebody will be feeling more satisfied. Then what is quality cost? Now this is important. Okay, these are the costs which are different than sales. Ma'am, selling price, ma'am, purchase. Arey Baba, these are not quality cost is all not all the stuff. So basically the COQ, I told you, COQ. Yeah. The cost of quality is the difference between the cost of producing, selling, supporting, etc. things. So now this is important. If you can see this picture, it is very, very important. Okay. The costs related to two parts. There is cost of confidence and cost of non-confidence. Over here, this is known as a good quality cost. If I'm doing these all cost, definitely my bad quality cost will be minimum, or maybe you'll not have any sort of cost. For example, good quality means prevention. Before, cost of implementing a quality improved program to prevent and to detect before they are occurred. Yeah, and that should be continuously done. Appraisal means at the time of production, you have to always have an eye. You always need to do inspection and testing so that before the faulty things are produced, you can just capture them and you can stop them. But if I don't do this much kharcha, definitely there'll be internal failures. Means cost arising from the failure to meet the quality standards. But now this is important. Before the products and services reach to the customer, means it is still in the company only. If it is out of the company, that is your external failure cost. So my external failure cost means it's a failure to meet the quality after the products, after. So it is before, it's after the customer has received. Cool, easy peasy. Now, what's the meaning of internal failure cost? See, the cost arising of the not so good quality, but before they are transferred to the customer. For example, if I'm understanding it right now only, that ma'am, there are certain defects. So what I can do, maybe I can put it on scrap. Maybe I can rework on it. Maybe it is, I can like dispose it. Maybe there could be some downtime quality programs. But what if I got to know that there are so much of faulty products only and only after I have made the sales, after the transfer. For example, if I got the complaint, yeah, if the people ask me, okay, ma'am, give the warranty. If they ask me, ma'am, replacement, ma'am, return, ma'am, servicing cost, a lot of cost. And that are nothing other than the external failure cost. I hope you guys are getting it. Yes. Easy, na? Easy. Now, we other costs, like for example, cost of lost sales, yeah, contribution loss, opportunity loss, products recall, calling it again. So basically, these are the both very bad cost. So they are known as non-confidence costs. Similarly, appraisal cost and what? Appraisal cost and preventive cost, a confidence cost. So appraisal cost means over here the cost incurred to ensure that the output meets required the quality standards. Means you are doing the inspection on and on in the processes. Inspection we have to do, ma'am, we have to do the testing on the ongoing process, on process, so that you don't prepare the defaulty products. Like cost of maintaining, yeah, cost of monitoring, and oh, I'm so sorry. Yeah, cost of monitoring and inspecting products. Yeah, in the terms which is specified basically, yeah, terms. Just give me a minute. Ah, I don't like this ones with different colors and all. Yeah. Cost of monitoring and inspecting the products in the terms of specific standards, but before they are released to customer. For example, I told you now, I want to know whether my equipments are fine or not. Are they producing faulty products or whatnot? Inspection and test, measurement equipments, or it can be like product audits, monitoring, testing, equipment expenses, or all stuff. The first cost, which was prevention cost, means prior to production only, I just checked the stuff. like prior to or during production. If I'm checking the cost, so to provide and to prevent the substandard cost is known as, for example, before I just do anything, like I just need to know whether should I invest in the machinery or should I take it on lease? Should I develop in this technology or should I not? So that my effects are faulty. Let's the faulty. Like I can take customer surveys, I can understand what my customer needs, I can do field trials, I can have a quality education, I can go to my supplier and review, I can understand what the investments to make use in the good equipment which is like less emitting to smoke and whatever it is, quality engineering and so on. Yeah, quality circles and all those stuff, and that is appraisal and prevention are cost of good confidence cost. Yes, students, with this we have completed the first topic, which is known as the TQM. I hope we understood it, yeah? The TQM was very easy. Total quality management. Now we have the quality practice, which are important. There is Kaizen costing, TQM, we studied, just in time, Six Sigma, and target costing. So without any further delay, we'll just understand what are the impact of TQM on quality. Like we have understood TQM, total quality management will help us to increase in prevention cost, but internal and external should be reduced to a greater extent. Okay, students. So with these, we have completed TQM. Yeah. Now we'll be starting it with a good concept and again a very important topic, which is known as GIT. What's GIT? Just in time. Just in time. What's the meaning of just in time? So considering the just in time, basically students, I'll just brief you out. Just in time is a situation where I will not produce hell number of units. Okay, I'll not produce so much of units and keep it as my inventory because I know to store the inventory it takes cost. To produce the inventory and to keep it aside, I have some other cost which can be avoided. So the waste can be avoided by implementing what? By implementing just in time. So in this concept, what eventually happens is, let's say if I get the order, okay, if I get the order from the customer to produce, or maybe they'll be having an order of, let's say, 1000 units. So I need to manufacture only that much to cater them, or maybe some margin I can keep up and down. But students, instead of 1000, I just produce 1 lakh units. Ari Baba, what will you do if you just have to store? Maybe the warehouse cost will be more, the insurance cost to hold it more, the transportation cost, ma'am, so much of funds. Why are you blocking? Instead of how much demand you get it, do it well for your two parts, that is your production as well as your purchase. So for that, I'll just explain you in a shorter way, which is again very easy. I'll just reduce its size so that it is clearly visible. Yeah, we know what is just in time. Cool. Yeah, we'll just try to make it. Let's say, for example, there is ABC company. Okay, ABC company has just implemented the just in time, has implemented just in time. This is one of my favorite topic. Okay, yes, students. So ABC company has made up a unit. Let's say they require, let's say, 1000 units. So they will give an order to whom they will produce, and they'll set an order over here to my, like I'm having department A, department B, and they'll say to department C, who is basically sales and marketing. So they'll say to sales department, okay, Papa, we want 1000 units. Okay, I agreed. So what will sales unit say? We know that they can directly say, now sales unit is going to say it to whom, guys? They are going to say it to, obviously, they'll inform it to this. That is basically the assembly and finishing department. They're the one who is actually the department who makes it. Okay. So they'll say, Acha Papa, we require, let's say, 1000 units. So assembly unit will inform it to whom? To the production department. And they'll say, okay, Baba, we need 1000 units to sell. So the assembly unit will say, okay, ma'am, then we need 1040 units. Yeah, because 40 units are something which are mostly damaged. Okay. Now this production department will inform it to the purchase department. Okay, Baba, to make 1000 units to sell it to ABC, I require, let's say 1050 kgs of raw material. Okay, raw material. And now the purchase department will go and purchase the stuff. So what happens? As in when I get the order, I'm going to process it. Yeah, as in when I get the order, I'm going to process it. So it's not something like I will keep the production, from the day one, and then maybe I'll come up. No, it's not that. It's not that. Yeah. So what we normally tend to do over here is we don't keep the units with us. We generally have two things important. Yeah? Students over here now, these two things are very important. Okay. So that departments are known as the production department and the purchase department. So when it is just in time, we understand it from the two perspectives. That is basically production and purchase and production department. Okay, students, with that overview, we can just read it and clear it. Okay. Just-in-time manufacturing means a manufacturing production method that aims to produce the required items at the required quality and quantity at a perfect time. So if I get the order of, let's say, 1000 units on after, let's say, after 1 week, I have to produce it exactly at the time. Okay. It's not like, okay, I can produce them and give them tomorrow. It's whatever they have settled, we have to just do it accordingly. So just in time is going to help us to achieve what? For example, if I get to know, Chacha Baba, this much units only I have to make it. So will I keep a huge amount of inventory? No, zero inventory. But to be very frank, we normally keep a nominal inventory. Yeah, we don't keep it like zero inventory in my go down, but nominal inventory, we write it. If I get a lot size, okay, 1000 units you have to make. Very less chances of having defects. Batch sizes is 1. Zero time of breakdown and 100% on-time delivery. Along with that, we will eliminate the non-value added activities which don't add any value towards the customers. Right? So these goals represents the perfection and are unlikely to achieve to the practice. Very simple? Yes. So what's the meaning of this elimination of non-value added activities? Guys, whenever we manufacture any units in the factory, we have certain cost to incur. Let's say we have some process time, which is normally applicable to each and every unit and which is essential. Without this process time, the things are not going to get manufactured for sure. But lot of inspection I'm doing, ma'am, the inspection cost, the move time, students, the storage time and the sequence time, the storage time and the queue time, sequence. These are your non-value added activities. But this process time is only value added activities. Because only process time is going to add value, the all non-value added activities. So even if you don't do inspection, even if you do inspection hundreds of times, thousands of times, it is not going to impact. It is not going to change. The users will not understand unless until it is a process time, right? So this can happen. This can happen. Okay, we'll just read it once. In the typical Western factory, the time taken to produce one unit is a mixture. It's an addition of what, guys? It's an addition of the process time, inspection time, move time, storage time, and queue time, in which, if you see, what are my non-valued added activities are any activities which don't add any value to the products. Out of the above, only process time is an added activity. Otherwise, everything is a non-value added activities, which even if you incur or don't incur, customer is least interested. Understood it? Yes. Now, what was batch size of 1? So traditionally, the manufacturing was performed. Yeah, just a minute. I'm so sorry. Yeah, I am very much obsessed with the stuff you don't, maybe you will not be knowing that. Yeah, so traditionally, manufacturing was performed in large batch. Yeah, we know initially. Huge, so big plant and machinery. Are thousands of things used to come. Are Baba, why? One batch if it is faulty, just imagine maybe other batch is also faulty. Oh my God, I'm rotten things. To avoid that. So here, big plant and machinery. Traditionally, it was large batches. To reduce the cost of setups, these costs were incurred because it machines in different manner to produce it. Okay, to produce it. And but in just-in-time approach, when I say about the just-in-time, the problem with the large batches that is that it always leads to what? It always leads to delayed and large inventory. If you have a lot of big batches, it is. But Congratulations, yeah, but just in time. We don't have so big batches. It's just one batch. Having machineries, small machineries, which do not need to continuously set up. As in when I get the order, I'm going to set up. It's not like often I just go on set up things and yeah work on it and on. Yeah, it's not that way. Good. So we have over here. This is assisted by having a cell-based manufacturing. So we just have one word which is known as cell-based manufacturing. So in our course, it is not there, but we know it's known as cellular manufacturing. So guys, what is cellular manufacturing? Well, it was way back in the ages. The company used to have the big machinery, big giant machinery. Just imagine, yeah. Okay, I'll just draw a thing for us to understand. Okay, for us to understand. Way back in the old ages, the old age. This is the old age, but I can like the traditional ways. The traditional ways. This is machinery one, very big machinery one, machinery two, and machinery three. Here it was like cutting department. Okay, it's a cutting department of okay. It's basically the textile industry. Okay, textile industry. Cutting department here. It's stitching, and here it's packaging and final thing, like the big machines. So if the big machines, the investment in the capital will be more, the depreciation will be more, the maintenance cost will be more. The like for example, what if I told you if this stitching industry's machine is like spoiled? Oh my god. Over here, lot of cutting things are kept here. Now these people are also sitting ideal because they don't have anything to pack. Sitting ideal. So don't you think the work is getting delayed? The work is getting spoiled? Yes. So to overcome this stuff, yeah. So to overcome this stuff, we have a very beautiful concept which is known as cellular manufacturing. In that, na baba, it's not like that. Yeah, okay, one big machine. They have small like the C cups cell. What's this cell? In this cell, now, one machine, two machine, three machine. One machine, two machine, three machine. One, two, three. Here it is cutting machine. Here it is stitching machine. Here it is packaging machine. So it's a person just starts cutting. Once it is done, they have to do this and this. So like if whatever one cell is also like stopped, the whole production process is not going to stop. Along with that, it's a small machine. So for example, if a customer ordered that he wants some, let's say, customized things. So if it's big machine, customization is not possible. But in this cellular manufacturing, customization is also pretty possible. Yeah. So it's a lot of stuff. Okay. So here now they have just returned it. Like initially they used to set up a big batches, but now it has been changed because of cellular based manufacturing. Having batch sizes of only one saves cost that they can respond very well to any changes with the customer wants. Up next, there are certain weaknesses of traditional culture. In traditional approaches to manufacture, was to produce a maximum capacity, like full capacity they used to produce. Are Papa, don't do so much. What will you do if you produce so much of inventory whose demand is also not there? Unnecessary, right? To waste so much, isn't it? So excessive holding of inventory is not going to work well. Here, with these associated cost and storage of obsolescence happens, a huge obsolescence will happen. Yeah, maybe there will be delay between customers ordering products and they getting the deliveries of the product. At times, at times there are certain bottlenecks also. So yeah, if you remember what was bottlenecks, I'm having some scarcity of let's say resources and all. So even that will not be highlighted because I'm producing it to the max that way. A lack of flexibility in meeting the changes. I told customized, ma'am cannot do customization. Cannot do customization because it's not possible in the traditional method. But with the system that we have, it's known as pull system philosophy. Guys, it's pull system philosophy, pull through philosophy. So a system that is driven by just production. It's driven by the demands which I get it for the finished goods. Yeah, for the finished products, whereby each component is only produced when required. So if I'm waiting for the demand and producing it as and when the demands I get, it is good. It's something like the pull through. So if I get it, I make it. Customer demands, and the demands are understood, and accordingly we will make the plans. If it's production one thought of doing, but he wants raw material, so he'll say to the purchasing department, exactly match me out the same. So matching the receipt of the materials closely with the usage so that the raw material is reduced to nearly zero level. Achieving over here, achieved by having a series of small production units, small, so that they can get it easily. And I'll not have like hundreds of suppliers. I'll have one supplier. Maybe he'll give me some better discounts, give me the products very soon. So yeah, all this can be done. Situation. A few dedicated suppliers deliver the defect-free components in like 1 or 2 times per day. It's like number of orders. If I get number of orders, accordingly I have to order it like once, twice, thrice, 4 times, anytime. Maybe in the day I can order them 5 times also. Yeah. So ordering cost will be more. Transportation cost will be more, maybe, but storage cost and all will be reduced for sure. Yeah. With these, we have just understood the concept which was known as the just-in production also. Okay, just-in cost, just-in-time was also understood. Just-in cost. Okay, I think like things are getting very, very easy, huh? We understanding it? Okay, yeah. Students, up next we have a concept which is known as target costing. I'll explain this with one beautiful example, and yeah, then we will go ahead with the definitions. Okay, students, when I was very small, we used to have the like yeah, it was my father who used to make some of the other cost. So what he used to like sell the toys shops or whatever it is. So he used to make like this in the traditional costing. In the costing, traditional costing, guys, it was basically the seller's market. What is seller's market? Where the seller was the person who was in a position to decide the selling price and not the buyer. So yeah, we know the concept of selling, bargaining power of the seller. Yeah, threats. Okay. So what they used to do, they used to have the product design. Yeah, they used to have a lot of cost. So products cost they used to have plus other cost. So they used to be some total cost. And then what they used to do, they used to add their own percentage of profit margin. And then they used to have some selling price. So do you agree with this stuff? Yeah. So ma'am, we used to have like this stuff on and on. So yeah, basically this was my selling price, which I understood it. But today, at this selling price, do you think if I sell, will the customers purchase? So maybe if it is like, let's say 10, 100. Okay. And normally, if I say normally in the market, if the selling price is $80, nobody will purchase. Legitly, students, nobody will purchase. Let's say my percentage of pricing over here is, let's say 5% I want profit. 5% I want profit. So now in the target costing, now what I get it, my selling price is 80. Let's say I need some percentage of profit. Let's say I want a profit of 5, for example. So what do you think? What should be your total cost? Your total cost now needs to be only 75. So you're supposed to adjust the total cost. And that is known as, this meaning is known as target costing, where you get the selling price because it is a buying market. So get the selling price easily in the market. To maintain that much profit, now I have to reduce and adjust the cost. That is known as target costing. Now we can just read it once, the definition. In traditional costing, traditional cost plus pricing model, the cost of the product is started with the point of calculation price. What's my cost? Plus I'll add the percentage of margin. Yeah, I'll get the cost per unit. Yeah, as my selling price also, whatever it stuff is. But today in the competitive world, such an approach is not possible. If I sell it whatever price I want, I'm out. Isn't it? So the price calculated, which may be too high, not accepted. So then people used to go for target costing. This is an approach that starts with the selling price, my so I'll say how much profit I want, and what is the remaining stuff. It's my target. It's my target cost. Yeah, agree? Yeah, I think yeah, getting it. So yeah, this is the target costing is the approach that starts with the market price of the products. The required profit margin is to be deducted so that I get the cost. So the target cost is to be compared with the actual one, and if there are any gaps, I can just go from. For example, over here, my normal cost used to be, let's say, $80. But now I know I have to, like, anyhow, I need to have a cost of $75. So I just need to know, acha ma'am, my gap at $5. So we have to adjust it. How? In a possible way, best way. Not just cost cut. Improve the quality. Ma'am, improve the quality, ma'am. Reduce the quality. No. Constant basis, slowly. Okay. So target costing is normally used during the design phase. Oh, yeah, of the new product. Yeah. Now, how it will do the target costing? Ma'am, it's very easy, isn't it? So, yeah, determine the price, mean selling price you have to take. Then you have to reduce what? Please reduce the profit margin. Get the cost, compare it with the actual cost that you incurred. Yeah, get the difference, satisfy the gaps, and go on. Repeat. That way, the process. Isn't it very simple? Yeah. So even if you see, this is a pictogram which is very simple. Like define the sales volume, define the price, set the target, set the price, understand the target price. If there is gap, please discuss with the customer and so on. It's okay. What are the implications of using this target costing? Yeah. Now this is important. Okay. So target costing is not a pricing method. However, it it uses implies that all cost plus methods will not be used. We know it's not applicable now. The prices will be set based on the external factors, means external market price, which my competitor have kept it, right? Yeah, to be at a sustainable profits. This is likely how to make the organization more competitive. Right? Implications. It is often easier to eliminate cost during the design phase rather than later. When identifying methods to reduce the cost, management has to consider what the quality also. We just cannot compromise the cost, reducing the cost in the names of destroying the quality. In long run, you will be definitely out of the market, which is something which is not acceptable. Okay. Then we have implications of using the target costing. For performance management, my target costing may provide more relevant targets than the traditional cost. Yeah, because my right now costs are very competitive. Means today legitly I'm telling, if it is pen, okay, if it's $10, in other shop, if it is $9, people will go and buy it from here. So we need to be very competitive. We need to be very competitive. Okay, we need to be very. So the target is based on the required level of profits rather than on some other cost. Cool. Then we also have to reduce the gaps. For example, my cost used to be $1, let's say 50. Oh, that question, 75. Sorry. My cost was 80. I remembered. My cost was 80, but I wanted only, let's say, $75. So $5 was nothing other than the gap which we are supposed to narrow it. So to reduce it, so as to achieve the targeted cost. So target cost relies on multidisciplinary teams which discusses the ways to reduce the gap between the actual cost and the targeted cost that you have to achieve. Some methods may be also useful. For example, what will I do? If I feel, acha, from this cost now which you actually incurred, setup cost is, let's say setup cost is $8. Ma'am, reduce it. Because setup cost is what? Non-value added activities. If something which doesn't add value, try to eliminate the non-value added activities. Try to reduce the component or standardize it so that it is easy to understand. Use the less expensive material, but along with that, we cannot use the cheaper quality. No. Cheaper quality, not acceptable. You can do like that. Instead of purchasing from so much supplier, go to one. Get the discount. Purchase in bulk. Invest in new technology so that your other costs are reduced. uh, employ a low grade to staff on production. See, I can say some unskilled or less skill is okay in the name of production. But when it is high skill, like where it is required to have a good skill knowledge, at that time you cannot compromise. Maybe there is a situation like I thought like okay, we are doing cutting department, stitching also. Packaging, should I do it or outsource it? So we need to know what is more better. Is it better to outsource the element or is it better to make it? So we need to have a make or buy decision. We have to take it correctly. Okay. So the decisions are also to be taken correctly. Then reduce the managing gap also and design it. Okay. So some methods are considered over here. That is tear down analysis, which says it's a reverse engineering. Means this involves examining the competitor's product to identify any improvements, which people will normally do. I'll say, Acha, this is my product. My product is, let's say, what I can say, a textile industry. So yeah, I'll understand, Acha, this is my product. This is my competitor's product. I'll see how good it is. Where can I improve? Yeah, where can I improve? Then we have this value chain engineering. If I want to go ahead with the new product only in the market, so what we have to do? Baba, we have to analyze the prices of different things. We have to get the knowledge from different facilities, right? So where I can achieve, what I can gain more, what not, everything. It's known as value engineering. Means it involves investigating a hell lot of factors, lots of factors, because I want to enter into a new product that affects the costs of product and service. This is going to improve what? This is going to improve. Its aim is to improve the design of the product so that it can function at a reduced cost by eliminating the non-value added activities. Agreed? Yes. Last we have over here is the functional analysis. It also involves identifying the functions of the products of the value and to determine the price that the customer is ready to pay for doing the functions, right? If the cost increases, the functions to be dropped because cost cannot be more than the benefits. If it's more than benefits, it's like useless going ahead. Yeah. So yes, students, with these we understood the target costing also. I hope like everyone is pretty fine. Yeah. Are we good? Are we going clear? Yeah. Can we go ahead? Yes. Up the next concept is known as Kaizen costing. So what's the meaning of Kaizen costing? Okay. I'll give you the best example. Small improvements. Okay. Small improvement on the daily basis. On daily basis. So what happened? I'll give you one example of McD only. McDonald's. Okay. They used to give burgers and fries. With burgers and fries, they used to give, let's say, three ketchups. Yeah, packets, three ketchups. Per ketchup, let's say it's 1 rupee price. Okay, cool. And they have observed that even if they give two ketchups, it's okay because people normally will not utilize three ketchups. They normally use it two. And one ketchup they go and throw it in the dustbin. So they thought, why to waste money, right? Instead, if somebody wants third one, they can come up for third. So I'll say, ma'am, so rupee one saving, what the hell they'll save it? What if I say you there are 500 customers coming daily? So multiplied by one, it's saved 500 into 30 days, into 12 months. It's gonna be huge. It's gonna be allegedly huge. So how much it is gonna be, students? So it's basically 1500 into 12. Please do it in your calculus. I'm doing 500 multiplied by 30 days into 12 months. Is it coming to 1,80,000? Yes, guys. Just understand. By just saving 1,80,000 rupees, you can save it. So that is honest. Use that much which is highly required, or if you can eliminate it also. Clear? So yeah, let's just read the question. Let's read it and try to understand it. Okay. So Kaizen means continuous improvement. So Kaizen technique is normally trying to reduce the cost of the product, and they have the characteristics like it's a continuous process. It's not like one day process and things are done. No, It's a standard, setting standards and continuously improving the standards to achieve the improvement, sustainable improvement in long run. To focus on the eliminating waste, like packet of ketchup. Yeah, by improving the process and eliminating the waste, improvement of all the employees in their own work area. So yes, students, that is the meaning of Asian costing. So if you just read it, yeah, it's written over here. During the first phase, during the day one, the target cost is being prepared, and this cost is total with the total cost for production, and this becomes the baseline. As the production improves, the cost is also reduced. And finally, if there is any delay, you can check it. So, as students, it's the same thing which has come up twice from my side. Yeah, it's yeah, like it's easy. So yeah, we can read it. So Kaizen is just a continuous improvement. Kaizen costing is a technique to continuously improve, which has three main characters. So what's that? Setting standards and continuously improving them. Second, eliminating waste and improving the inputs. Same. Yeah. Eliminating waste in which sense? Non-value added activities reduce. If I think like the setup time is better, reduce the setup time also, reduce the production cycle time. Only concentrate on those which are added value. So which are like added value added activities. Okay. For example, in this, if the process time is value added, only concentrate on that. Otherwise, if possible, you can just reduce it or try to eliminate it for sure. Up next now, we have the last concept, which is known as accounting system. So if you know, in the prior years and way back, we used to have the accounting systems done in the books of accounts, like allegedly in the books. Like we used to have the paper pen. Yeah. But today everything has been covered in the computerized ERP system. So initially we used to sit and make the budget. So yeah, if I'll just read it. Traditional method of accounting system includes traditional budget, traditional costing, traditional standard costing, and getting the variances. So such system will be inadequate to support the other things. Like what are the changes? If I'm talking to you about quality, maybe like the things which was made on the book is not enough to portray about them, because as management will have to need to be aware of the quality based on the four categories. What was the four categories? Yeah, TQM. Guys, you should know cost of good confidence and bad confidence. Yeah, my prevention cost. Yes. My appraisal cost. Yeah. My internal failure, my external failure. Yeah, all those stuff. So yeah, such costs are typically invisible if I just mix it with the general overheads. So, but today we have to keep it separately so that the people will also know that yeah, we are trying to improve the quality for sure. It also may be appropriate to introduce an activity-based management system, which we call it as ABC costing. Based on the activity, I have to allocate to it the overheads. Yeah, to calculate the cost accurately. Then if I talk to you about Kaizen costing, for the introduction of Kaizen costing, management is required to have an accounting system which provides us with a functional analysis based on the target cost. Yeah, but in later years, small reduction is to be made from the target cost. And if I'm doing it on the continuous basis, I'll achieve the price. But in the contrast, in the traditional method, these things were not revised, and everything which was standardized that used to be standardized for long period, which is again not accepted. Yes. Up next, we had JIT, just in time. So in the traditional manufacturing system, a lot of time was spent on like just making the value for product. But I know today, just in time over here, it's like please don't do the valuation calculation so hard, because I don't want so much of stuff of inventory only with me. So it's a change. So in the prior years, the accounting and the logistics system will need to be focused on ensuring that the production systems are equal to the planned demands. Because prior, they used to just make it in lots, but now the lot making system is not acceptable, right? They are supposed to make any product on whatever quality, whatever quantity they get the demand to be delivered on the appropriate date also. So yeah, they need to have a proper demand. This will help them to accurately predict the customer's demand. Let's say it can be 1000 units or let's say whatever. Okay. And ensure that all the materials which I have received it are of good quality. As poor quality will reduce, it will like mislead to a hell lot of things. Now, students, we have a different concept that's known as quality in MIS, Management Information Systems. So, what's the meaning of quality? So, we know that the importance of whatever the management system is and the contribution is basically understood by the examiner in the earlier chapters we have learned. Because the management information system are very important, it is clearly important that they need to have a good quality. In information system also, we have to know about the functionality means whatever the systems are given, they have to catch up about whatever they are required, they have to function it accordingly. Then whatever the system gives needs to be the reliable measurements, means it should be free from any errors. People should have a trust on them. Yes. Again, it needs to be easily usable, otherwise it is going to be like a waste. This implies user-friendly interfaces, well-designed manual structures so that it is understood easily. They need to build the quality, needs to be flexible also. And over here, the quality is important over here. Why? Because the system may be critical for someone to understand. The things may be down, the business may be up and down, so things get interrupted very soon. Poor system, poor quality information will give you a better, not the better, the worst decision because the things are not exactly what it needs to be. The need of quality. External stakeholders may have an interest in the system. For example, customers placing orders online, he may be interested in to know the system. But a poor system will always lead to poor relationship for sure. So yes, students, if you remember, I used to say you things needs to be accurate. What's accurate? Okay. So the qualities of the good information. So how my information needs to be, guys, my information should be accurate. It should be accurate means consider all the things correctly. Arithmetical correct. It should be complete. It should not be like vague. It needs to be complete. Over here, it needs to be cost beneficial. So like my cost is, let's say, more than my benefits. The things should not be accepted. So the cost should be less than the benefits. It needs to be you, that is user target. It should address who is going to use my information, right? They should address it properly. Yeah. Is it the kids who are going to use it? Is it the elder one? Is it the Gen Z? I don't know who else. Yeah. Then it needs to be relevant. The person who needs the information, I need to keep them only. For example, in the offices, if I'm giving an unauthorized access to a lot of people, there is a huge chance of getting manipulated. Yeah. So relevant to the right person only, I need to keep them. Who gets it needs to be authorized, means it should be the trustworthy person. Needs to be given in the timely basis and yeah, easily accessible to be used. There is some graphics and also obviously it needs to be an accurate system. Okay, last concept which we have. See, it's like a revision, so definitely we don't have so much of things to like take up care of. I'm just doing it. I know you guys are recalling the concepts. So what's the meaning of Six Sigma? So Six Sigma is basically a quality improvement process where we have to check on if the quality is improved, if the techniques are improved, it will end up into having a customer satisfaction and definitely zero difference. So if I'm telling you most of the companies are running into some of the other sigmas. So if it's a level 1 sigma, it says you have like 31 percentage, whatever output you have produced, 31% is correct and 69% is wrong. Oh my god, defective. If I'm talking to about level 2 Six Sigma, yeah, which is nobody is going to ask you in the papers for sure. So it's like 69% stuff, whatever you are preparing is correct, but 31% are faulty. Normally, all the companies, the students run in 3 sigma level, where 93.3% whatever you are producing are correct, and some 7% is wrong. So it's a normal industry level. Like Reliance and big companies normally turn up to be the 4 sigma, where 99.38% things are good, are perfect. But if it is Apple iPhone 6, if it's Apple iPhone 15, definitely it runs on Six Sigma, where 99.9999% things are correct. So it's like near to perfection. So in that Six Sigma, guys, we have two concepts, which are known as AIC DMADV. So it's basically about the existing product. It's existing thing. It's about the new one. So yeah, we need to know, for example, if it's day or where we have to like define okay, where there is a fault. If I define it, I need to measure it. Then I need to analyze it and I need to improve it. And last, I need to control it. Means, guys, just try to understand it. If I'm running with Six Sigma and if I'm getting any defects, so how to cater the defects? So if I want to cater the defect, I need to run ahead with the Six Sigma. Means if it's an ongoing process, I have to have a DMAIT process. If it's a new process, it's basically to define, yeah, to measure, to analyze. Now this V is different. And D, that is to design and to verify. Like only these two things are different. Cool. Now I'll not go ahead, we'll just read it. So Six Sigma is basically what the quality improvement programs and the objectives was to reduce the variation, yeah, in the process. So that basically zero defects are understood. So I told you when it is Six Sigma, the correct things are like correct percentage is 99.99966% are correct. My defects turns around to be basically 0.0034%, and which is actually in the numerical terms the 3 points, that is 3.4 defects per million opportunities. So Six Sigma is going to be useful in both the manufacturing and the industry sector also. What's the aim? Yeah, to get the zero defects so that my customers are satisfied with the better quality, to reduce the cost. And my Six Sigma focuses basically on the business process, which is in the existing process, existing. If it's existing DMA, AC, okay. The process to attempt to verify. In other words, what causes the process? Process to deviate it. We have to just remove it, okay. If I'm completely changing, so it's a BPR. It's a business process re-engineering. We are not doing BPR. It's like DMADIs. So yeah, it's first. If I'm having any problem, like this is my product, and if I feel, oh my god, this many defects are there, ma'am. Instead of 3.4 defects, it's like, ma'am, 8.9 defects. Ma'am, the defects are more. So they'll find it out. Okay, why is the defect more? If defects are more, they'll figure out. First of all, they'll define what is the problem. Why are the defects coming up? Why the people are not happy? This is usually the factors that shows the customer is not happy with the product, with the quality of the product. So yeah, they can understand it. What is the query? They will measure it. How often these things are occurring? Yeah, is it something to be solved or very problematic? Then they'll analyze the existing whole process, how it is going. Do they want to change the existing process or not? So they'll analyze the whole process, identify the key problems which can be done so that my problems can be solved. Basically, they'll try to find out the roots cause, like why the problem is occurring. They need to identify the root cause. Last but not the least, over here they'll improve it to get the benefits. Yeah. And like finally they'll control it also. So maybe the next time the things will not come up that fashion. Yes, agreed. In order to check that the expected improvement has also taken place. I hope it's clear. Yeah, we know that. Then there are certain advantages and disadvantages also. So improvement to processes are based on the detailed analysis of the process rather than just on the management's gut feeling. No, detailed process they'll do. They'll not sit idea. Six Sigma managers forms all part of business and experts too. It's not just you and me who are going to sit it and do the work. So there'll be a lot of experts engaged. Yeah, just leave me drink water. Like it's all Diwali here. Advantages. This means the projects are given the proactive management, not the reactive one. The proactive. It happens before it happens, survey, which give them the greatest chance of success. It focuses management on customers' needs and meeting the obligations also. Advantage, it needs to be very much detailed so that things are identified. And there are disadvantages also because it is not easy. It is consuming, time consuming, and expensive also. Yeah. The use of the models to demonstrate the process is easy, but in reality, it isn't so easy. So yes, students, this is what we learned about the concept which is known as Six Sigma. I hope you understood it. Yes. We have already covered this topic, if you remember, this 5S, which was there in the previous topics also. So what's 5S? Yeah, to maintain some quality better. The new topic, which is known as 5S, means at the workplace, if I want to increase my efficiency at the workplace, how should the workplace be? For example, it is my CS office. So I'll be having on my decks, yeah, I'll be having GST files, I'll be having income tax file, I'll be having appeal file, I'll be eating it. My wrappers will be here and everything will be dirty, dirty, dirty. Will you like to work? If all the files are like this only, so ma'am, it will not work. It will not help. Right over here. So we need to have a 5S model also. So I'll just delete it. So we need to have a 5S model which says basically, first of all, try to scrutinize things. Means what you have to do. A lot of things are there in the table. Please like just remove it out to what are unnecessary and please set in order properly which you actually require, right? So to introduce order when possible, for example, by ensuring that the items are arranged so that I can find it easily. For example, if I don't want this, I'll just remove it. Then I'll set in order with the numerical numbers like A file 1, A1, 2, 3, 4, 5, that different way. That B 1, 2, 3, 4, 5 with the numerical orders and all. That is basically we have to systemize. For example, arrange in the identical items like files number A, name starting with A, it should be 1, 2, 3, then B, so on. So that it is easily available when I want it, right? It's a systematic way to accurately pick in the shortest time period. Then what I have to do, my office to be very clean. Like what I tell them, please, I want the daily cleaning and all. That is sanitize means to keep it tidy, please clean it so that it needs to be hygienic also over here. Then it needs to be standardized means, for example, if I'm having GST files, keep it with yellow color. Yeah. Ma'am, it's income tax file. Ma'am, keep it with red color. Ma'am, if it's appeal, keep it with blue color. Why? So that we don't have to like go on figuring it out. So it's a standardization means this involves, yeah, finding the best way to get it easily. And last, if I understand all this function and if I work accordingly, I can achieve it and I can sustain it in the long run. So yes, students, with these, we have completed the chapters where we have learned about the quality management, the quality related cost, all these types, which is Kaizen costing, total quantity, yeah, TQM, just in time, Six Sigma, what is lean, and 5S concepts. So I hope there is like no more confusion. And yeah, students, with these, we have like completed the chapter, which was again very important and in the very less time frame we just could manage. So students, this could be the best topic for you when you can just read it in the revisionary times. So I really wish you that you would have understood this topic also. And if you guys have any sort of doubts, you are free to just message me, okay? You can message me on Instagram, Telegram, yeah, or maybe in the chats for sure. Okay, if this video is really helpful for you, I'm very much blessed because now we are soon going to do the mock papers soon. So yes, students, take care. Okay, see ya. Bye. Thank you.